Hey, everybody, and welcome back. So today we're going to go through really what are the three big reasons that are affecting our real estate market. So make sure that as you are watching this, hey, you know what? Like, subscribe, share the information, right? Because really at the end of the day, whoops, let me go back one. I was checking a couple of things out here. Here's the thing. There's no selling. There's going to be a little bit of an offer if you guys are interested on some new construction ideas, but share this information and make sure that you subscribe. Keep asking questions. Questions are the best. Why? Because it helps you to be really best prepared for when the time is right. And that way, when you make your decision, and with whomever that is, or with whatever home that is, you know you're making the best decision. A little bit later, we're going to be updating the 5 questions you should ask when getting quoted mortgage rates. That's been a common thing. Can we provide some more relevant or more current information as far as interest rates and things to look at? Absolutely. We've already got it geared up. That will be a video that will be forthcoming. How's that? All right. So here's the thing. A lot of people are like, George, what the heck? Aren't interest rates the number one thing changing and affecting our market? Well, yes, it is the number one thing, but it's not the only thing. There are 3 things that actually are affecting what is going on in our real estate market. But as it says here, while mortgage rates have resumed their decline, the market remains hypersensitive to rate movement. That's absolutely true. In fact, Lawrence Yoon from the National Association of Realtors said, hey, you know what? We're finding out that at 6.8% and above, buyers are exiting the playfield, which is hilarious. However, other buyers are capitalizing because there is less competition and they're finding that there are better opportunities out there in the market because our inventory is super limited, item number 2. And they're able to capitalize on that. Super important, okay? Now, when we finish this off, with purchase demand experiencing large swings relative to small changes in rate. Once rates hit that 6.6% and lower, buyers are coming back into the market. Now, for a seller, that is super important to monitor because that is also going to impact your number of showings, what kind of eyeballs you're getting on the market. Remember, putting your home in the MLS is not marketing, okay? That's like going to the grocery store and not seeing that advertisement when you go in the front door because the advertisement is what gets eyeballs on your home. That's no different than actual marketing. Now, I'm not talking about syndicating to other real estate companies that happen automatically like Redfin and Zillow and other real estate firms, okay? That's not what we're talking about. That happens. What we're talking about is paying and targeting and getting eyeballs on your home specific. No different again than that ad that you see at the grocery store when you go in. It offers, hey, Progressive Soup's on sale today. Oh, that's a really good price. I have to go there. You may not even have intended to go there, but now you see it, right? Now it's, hey, that's a good time to pick that up, for when it gets cold, right? Just say it. All right. So understand, interest rates are going to have a big impact on it. Second item is inventory. Let's talk a little bit about inventory. So when we pop over here and we take a look at what's coming on and what's coming off, right? So here's the thing. New listings, we have 1,242, always higher on Friday, which is a good thing because during the week, like you saw on Wednesday, Thursday, it was a little bit lower. But look at this again, 1,453. We are still seeing more homes going off market than coming on market. All right. And then, of course, as you see, we have 945 homes that actually went pending, that actually sold. I'll get my story straight here sooner or later. But anyway, listen, only 1 week since October 15th, the middle of October, has the number of homes new on market exceeded the number of homes that went pended. Super important. We were at 2.5% inventory. Go back and take a look at our January market update. You'll see inventory was like 228% above what it was the year before. Well, we're actually minus that. So when we take a look at the actual stats, let me get to the actual stats here. I want to talk about this. We talk about interest rate, okay? Interest rate is a driver in the market, probably the key driver. Yes, it also affects inventory. Inventory because sellers have 3.5%, and that's what I was trying to show you guys here. Back in March of last year, you can see our interest rates were really low. Then you can see they have continued to climb. They bobble up and down as they always do, but they've gone anywhere, to the 6, 0.875, 7.25. Didn't quite hit 7.5, but now they're back down below 7 again, but really close to it. Okay, people that have a 3.5, just chatting with 1.875. Why do they want to trade up to a 6% mortgage, 6.5% mortgage? Right? It doesn't make sense. So they're holding off. Inventory is the second issue. Interest rates, lack of inventory, maintaining price support with homes, okay? That gives us an affordability issue. And in fact, in a lot of these media reports that you're seeing, they're saying, like the one you did on Wednesday, Thursday, it said, hey, look, 17%, since January increase. All right. Okay, that's a median price, sales price. Hey, listen, if you qualify for $100,000 at 3.5%, okay, you're only going to qualify for about $800 a month when the interest rates, basically double, maybe even $750 a month. Okay, so that means that you're not buying that $100,000 house, you're buying that $750,000, $800,000 house, somewhere in there. Okay. That doesn't mean that the value of somebody's home necessarily goes down. That just means that you're looking at a different price point, and that becomes the new mean average. What's important about that, it still tells you where the bulk of the buyers are at. That's why that metric is still there. It's just sometimes people confuse home values with what we talk about median sales price. And they're two different things. Because actually home values actually have been creeping up about 0.5%. We figured that we were going to be about 4% this year. I think it's a tad bit higher, at least at this point. If interest rates trickle back down in Q4, fourth quarter, like we expect, and into 2024, we're going to start to see more activity. If we see the Feds do a pivot meaning they stop increasing rate and actually reduce, that is a pivot that is going to create a recession or the perception of one. We've actually kind of been fighting one. I think we're at 1%. Remember, a recession is only 2 consecutive months of negative GDP, gross domestic product, right? So when you have a recession, which everybody wants to fight, which everybody knows it's there, it is looming. Once that happens, typically mortgage interest rates come down. Real estate markets start to improve. Values improve. Exact opposite of what most people think. I know, it seems really strange. All right, moving on. We digress. So when we take a look at mortgage interest rates, you can see that our average right now is about 6.71%. It's a little bit higher as of Friday afternoon. This was taken more Friday morning. Again, remember, it's a stock. It trades. It goes up and down. It does all kinds of crazy things throughout the day. And so you need to make sure that as you are looking at being under a contract or you have a mutual acceptance contract between you and a seller, it is at that point then that you can lock in your rate. All right. Super important to understand because then you need to watch your treasuries, you need to watch bonds, you need to watch mortgage-backed securities. There's a couple other charts you need to keep in mind as you are under contract or close to being under contract. So you are locking in at the right time and make sure that you have a very good relationship with your mortgage lender, okay? And that they respond. That is super important. Online companies typically don't respond very well. And remember, an email or a voicemail does not lock rate. Remember that. All right. It's kind of like insurance. All right. Hey, take a look at this. Here's something super cool. Okay. Now, we take a look at what our rates are doing versus what inventory is doing. As you can see, our inventory is down basically 25%, and sales are down 30%. Now, the important one on this one, as you can see, on the sales side, when we talk about sales are down 30%, that's 10,000 homes. Now, when you take a look at what's just below that, as far as actual pending sales, you can see those are down. But when you also have a significant reduction in homes available, naturally your sales are going to be lower. That is a big difference when we take a look at some of the new construction, especially when we take a look at the REOs, or bank-owned inventory, right? So as let's move over to our next screen, which is new construction. All right, here we go. So when you take a look at these numbers, you can see that our active inventory, or what I should say, for sale inventory, is actually doing well. Our new on market, meaning new homes coming to the market, is up almost 12%. And then funny enough, sales are down just a tad bit, but pending sales are up 27.4%. That is a big deal. And the reason that is a big deal is because when you take a look at the different elements of what new construction offers and what they can do slightly different than a homeowner, that is why you're seeing a lot of folks gravitating towards new construction. Well, one, because it's new, and two, because there are incentives. What kind of incentives? In fact, take a look at this. So we did a screenshot, and this is a big deal. If you're looking at new construction, there are some builders that are offering a 5.49% 30-year fixed rate for standing product only. If you would like a list of these homes, call or text 425-236-6777. Make sure you give us your price point in the areas. And if you're also looking for a 55 and older community, there are some really great programs out there. There's a couple of really fabulous developments with beautiful new homes. Let us know. We'll send those to you guys. All right. Again, if you're interested in that, feel free to fire off the information. It's the only kind of sidebar information to make sure you're getting really good information. All right. Now, when we take a look at our next slide, we talk about REOs. This is super important. Now, there was a report that came out that says, oh my gosh, foreclosures, same month, year over year, they're actually up like 41.7%. I think that is just super funny. That's 5 homes. Remember when we talk about some of our numbers, because our inventory is so limited. We have 1 month of inventory, 1 month. Okay. Now, if you don't know what that means, I'm going to explain it, because technically we should have 4 to 6 months. Technically, really the last decade, the last 10 years, we should only have really about 2.5, 3 months. That's where we've been kind of at. The unicorn years, 2020 and 2021, we had 7 days, 10 days. But if we look at it over 10 years, excluding those, about 2 months, 2.5 months has really been where we've been settling out at. Okay, so even if we look at that, we still have only half of the homes that we should, right? We should have 18,000, 22,000 homes today. We only have 8,000 homes. When we talk about REOs, this is all of Washington State. Now, when you take a little tiny number and it has a disparity of only 5 homes over half of Washington State, they say it's gone up 41%. Look, they're just trying to capture you, trying to create sensationalism. It's right here in black and white. It's a negligible issue. Our foreclosures in our area are nominal. Now, you might say, hey, George, dude, look, your sales are off like quite a bit, year over year. Sure. There's a few of them that, and when we look at them, because we work with 7 banks on a daily basis, listen, here's the funny thing. There are some lenders from industrial world on the East Coast that have said, hey, listen, you have to buy this home. By the way, you have to bid on it and pay us a bidding fee. And you can't go and see it at all. Okay, you have to buy it sight unseen. Oh, and by the way, you're going to pay at or above market value. Well, who would do that? Nobody who is smart. Okay, so understand, hey, listen, when we talk about some of the homes staying on market, well, those are the ones. In fact, there are five of them from that lender that has done this, and it makes zero sense, really zero sense, because nobody wants to buy a home at full price that is tenant occupied, that you can't get in, you can never see it until you own it. And why do you think this is a good idea? You have no idea what the interior condition is? Anyway, moving on, I'll get off my soapbox. All right, so when we take a look at our next slide here, it's the like, share, and subscribe. Smash that subscribe button. Why? Share this with people that you like. And listen, keep asking the questions. You guys are asking some really amazing questions. Love, love, love it. And we get back to you, except for on Sundays, in about 30 minutes. All right? If you have anything special, sometimes we do a video just for you, so you get that. In the meantime, it's a little wet outside. It's going to be great this afternoon. Everything got watered. Got to like that. You guys have an absolutely beautiful weekend, and I will see you on the next video. Take care.